Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
There we go. Here's not a lot of news today. Pretty quiet news day. Something at 10 o'clock for the U.S. Consumer sentiment, but I wouldn't be too worried about that. It's an orange folder. It's going to be at 10 o'clock. We'll probably be done. Well, we'll probably be done in this room by that time. And as always on Fridays, don't be too big of a hurry to give all the money back that you made during the week. So just a word of caution. Usually if I'm profitable during the week and I've reached my weekly goals, then Friday's a good time to just reflect on, just keep on practicing, maybe trade and demo if you're going to take some trades, see how they react on weekends. Because remember, Fridays are Mondays and Fridays. Mondays, the institutions are getting their positions for the week. Fridays, they're taking their positions off the table, getting ready for the next week. And so there's a lot of times there can be a lot of volatility, and sometimes things don't work quite as we plan. So just keep some of those things in the back of your mind. Now let's take a look and see what's hot and what's not. And right now we're looking at the Swiss. New Zealand is strong on all four. Well, Swiss is strong on all four time frames. So we went trade to the strength of the Swiss. Also, the euro looks pretty strong too. So I like the top two, the strength of the euro, strength of the Swiss, not against each other, but against the dollar and the New Zealand dollar. So let's take a look at I looked at the Swiss New Zealand earlier and I didn't really like that too well. So let's take a look at the dollar Swiss. So let's get a chart on that. Euro, dollar Swiss. There we go. And you can see that the Swiss is the second currency of the dollar Swiss pair. We said the Swiss was strong, so we're looking for strength to the downside. And you can see it has a nice big move. A nice big move since about 3 o'clock this morning. It's been moving down sharply. We'll draw our charts and get our playground now figured out here. And so right now, I'm looking at my 15-minute chart. I'm going to put right now we're right at between a green and blue line. So I'll start with the blue line down here below and make this 15-minute blue. That's going to be strength. That's going to be 15-minute blue. It's going to be 15. It's going to be a 5-minute blue. It's also going to be a 2-minute blue. So that's going to be this is going to be a major bounce point right on this one. So we're going to be looking at, and possibly looking at maybe a bounce on here. We'll see what happens. So, and then we have our green line, which is right here. This sets our playground. And we can see we already had the break of the 5-minute break. Let's see if we can green. So let's come over here to our 5-minute chart, since this is where we've now established our range. And it's coming right in on a 5-minute red line. So right now what I'm looking at on this one is if we can get a 5-minute close below this red line here. I like using the 15-minute lines and the 5-minute lines for confirmation to take the trade. I use my 2-minute lines pretty much for targets and for stops. So I'm going to make a note of this one right here. This is going to be at 0.9207. Looks like is where the line is. Make this one red. Red. Make sure I got this. Make sure I got the label right here. Put the label on, so make sure I got the right one. Like I said, it can be confusing with the red ask price and the red lines. Oftentimes, you're not really quite sure which one you're looking at. So we went 9206 is the number we're looking for. 9206. That's right about here. So it's coming bouncing right off line. You can see, look how it bounced right off that line. I mean, it's just like right there. So we're looking for a 5-minute close. So right now, what I'm looking at to draw this one out, I'm looking at a move down, 5-minute close, come back, retest this line, or maybe come back to retest the 2-minute line, which is going to be probably right about, let's see, that should be 7 pips. Yep, 7 pips is going to be right about in there. And then we can come down for our target. Let's see, where is that? Where are we at here? And we can come down, then we can be looking down for our target for, which is going to be pretty much right down in there. So basically looking for a close. We can take it here and looking for it to come down to, actually, all we need is just a close. And then we're going to come down to it's going to be the, looks like it's going to be a red line here on the 2-minute, which is right here. So we're planning our trade here right now. Plan to see what it's going to do. And 2 minutes, 2-minute red. Here's our 2-minute green over here. Actually, wrong color. Now that's what we're going to do here. Cancel that. So right now we wait. So basically what I can do is I can be looking at here we have it planned out. We have it scrolled out here. Now remember, we need to have a 5-minute close. Now if we get a 1-minute candle close, but it's not on the 5-minute marker, it's not a trade. And also we want to make sure that our Hercules is saying that we have the spread on our 5-minute chart. So now that we have it drawn out, I'm just going to put this over here at about 45 minutes. So that's usually going to be on a 5-minute mark. And then like I said, basically, we can take it anywhere between wherever it comes down, and this is our first target right here. That'd be target 1. And then if it comes down, hits our target, we can get out of the trade. And then if it comes back to retest this area, we can retest it and we can take a second position. And then we come down and do it all over again. And we may be possibly looking for, depending on how strong this is, we may be able to catch another 7 pips, maybe even 14 pips down to the next green line. And that's the way we're looking at this trade. So right now, it's not a trade yet. We need a 5-minute close. And that's going to be, that's at 40. So basically, this blue candle, right? Let me draw an arrow on this. This blue candle needed to close below the red line. It did not. So therefore, it's still not a valid trade yet. So I'm going to move this thing over to 45 minutes, which is right where the 2 is. I'll move this one over just to get out of the way. So right now, we're still looking for a close below the red line on the 5-minute chart. And we're also looking for the Swiss, which is going to be the lighter color. That's more like the grayish line here. That needs to be stronger than the US dollar, which is a blue line. And you need to have a spread by 3. Right now we have a spread of 5. There's a 5 and a 0. That's a spread of 5. If we come down here, get the close, comes back up, and we still have that spread of 5 or 3 or more, and we can take the trade. And so we're looking at taking the trade to the short side. After we get the close. And it's got the candle before where the one is, the candle that closes just before that, that has to be below the red line. If we get if this candle that's active right now, if it comes down and closes, it doesn't count. It's got to be the 5-minute candle close. Okay. And that's the setup what we're looking for. I'm going to put an alert on this. And so for not here, we can we're going to add an alert. So that way, if it comes and touches that, we'll have to come back and take a look and see what it's doing. Okay. Questions?
Doesn't seem to be right now.
Good here.
Does that explanation sound clear to everybody?
Did to me.
Okay.
To me.
If it's not today is Friday. Feel free to ask questions. If you have some things that are a little bit foggy in your mind, you want some clarity, today's a good day to do it. We kind of call this Open Mic Friday. If you actually want to talk to us, we can turn your mic on.
Oh, here's a question for you, Al.
Okay.
It just popped up. How do you know where to put the end of wave 1?
I don't. I just put that hypothetically. The only place I put the end of wave 1 right here. I put it below the red line just to signify that I need a close below the red line. Once I get the close, then I'll put it right to where the wick of the candle is for reference.
So it's just projected, really.
It's just projected is all it is. And
yeah.
I put it at if you notice, if you look down here with my time clock, I have it set on the time of, I have it set for 45 minutes past the hour. So that's on the 5-minute mark. So that I know that if I put my cursor and I see my little cursor line, I know that if I need that last candle before it touches that line. So in other words, let me emphasize this a little bit.
And Sunita's also asking, so how do you know where to put the beginning, the 0?
The 0, I usually put it right at, first off, when I'm looking at this, I'm looking for a strong move down. This is a strong move down. I usually put the 0. The 0 is not really that critical, other than the fact it signifies that this was a strong move down. It's retracing, but it's found a bounce right off of this line. It's basically retracing. Now, I do want to respect the idea that this is our 7 pips in this area. Remember, it looks pretty big. When you measure this out, you're still only looking at 7 pips. It looks a lot bigger than that on your 1-minute chart, especially when you expand it. But that's only 7 pips. But we had a strong move down, short little retracement, and now I'm also expecting another strong move down pretty much to this area. When this thing closes, I will probably be ready to just take this thing on a short, because to me, this is looking like it's a drop, it's basing, and then we expect another drop equal to this area right here. It may stop a little bit short of it, but if this candle, let's see, right now, we do not have a 5-minute close. Right now, this candle opened up at 7:45. That means that the 5-minute candle closed up here. Right to the left is 7:49. When that candle closed at 7:49, it did not close below the red line. So there again, now I've got to move this thing over another 5 minutes. And so I'm going to move this over to 50. I'm just signifying that I need it to close on the candle before this vertical line. If it closes over here, if this candle comes down, closes, and comes right back up again, it doesn't count until I get a 5-minute candle close below the red line. And you can just as easily just go on a 5-minute chart, but you could see the price action a little bit easier on the 1 minute. Okay, so I'm going to move this to 55. Move this back just right below it.
You also have another question now from
okay.
Sorry, just joined today. What's the red line and blue line, and why you drew the lines there? Also, Paresh is asking about the RCS tool. When can they get a copy of it?
I wish I could answer the second question. I don't know when the copies are going to be available. All I'm going to say is that we're working on it. I guess we'll just have to be patient with it right at the moment. As far as where the red and green lines, these are algorithmic plots on the TradingView platform. We have them on the trading view. We don't have them on anything else yet. But basically what it is, is basically an indicator. And what it does, it plots the Fibonacci lines right on the chart, and they're color coded with the stronger lines are colored blue, the weaker lines are red and the green. So the extremes, basically, our two extremes are basically going to be blue, green, red, and it goes back to blue. But on the different time frames, it changes in between. So it's like here's a 15-minute blue, 15-minute green. Up here is a, let's see, let me get on my 15-minute chart. Okay, so here's a 15-minute blue, here's a 15-minute green, here's a 15-minute red. And then it goes back to the blue again. And then when you have these three in those color codes, basically what it's saying is that when it gets above this red line, this is a shorting area. When it gets below the blue and the green zone, that's a go long area, a buying area. But what we do is we break these zones down into thirds. And each time frame down on the 5 minute, they're broken down into thirds. So here's the, now the 15-minute lines are going to be blue on the 5-minute chart. And so so think of it as this would be a 5-minute blue, if I can draw this up here. This line here, this 15-minute green is going to be the same as a 5-minute blue. Let's see if I have a 5-minute blue in here. I took those out. No, let me just draw one here. That's going to be the 15-minute green is the same as the 5-minute blue. Then we have green, red, and then back to 5-minute blue again. And make these blue. Like I said, the 15-minute, any 15-minute line is going to be blue on the 5-minute. It's going to also be blue on the 2-minute. And so it'll be blue, green, red, back to blue again. But all it does is breaks these sections down into thirds. And that's how those fibs work. Hopefully that answers your question. Is this tool only for scalping? No, we use it for swing trading as well. It just depends on which time frame you're looking at. If you, the tool we have basically we call it a clock on it. But basically what you do is we have monthly, weekly, daily. Each one of these different time frames, it basically spreads those lines out further and further. So if we're doing swing trading, which is what Brian does in the evenings, he'll be using daily and 4-hour zones for his swing trades. It gives you a little bit longer, further zone in between for the higher time frames, which means your stops are going to be usually a little bit longer and stronger, a little bit more stop. But for swing trading, that's we'll just change the clock on it. We call that the clock. This is basically what we call our clock speed. And it depends. Now, and for scalping, what I do is I use a 15, 5, and a 2 for my 3 time frames for when I'm scalping. and we're only going for pretty much 5 to 7 pips for our targets. So right now, this thing is still respecting this line right here. Move back everything over 5 minutes. Move it over 5 minutes. Move it over 5 minutes. And we'll move this thing over 5 minutes. And we're back to normal again. So this is actually having a little bit of a rather strong basing going on right here. It's a lot of times, just if it's a really strong move, it'll drop, have like maybe one candle, and then it'll start to drop again. This one's taken almost 20 minutes to get past this little area right here. So that may give you a little bit of pause. And also you can see now on our 5-minute chart, we still have the 3-point spread, which is good, even on this pullback. So that when this thing comes back down through here, this thing should be spreading out a little bit further with the Swiss being stronger. But it is finding some buyers coming in right around this area. So still no trade yet, still waiting for the alert to happen here. Okay. And so while we're waiting for this, let's take a look and see if there's anything else developing.
Well, on the UK 100, there is a buy developing.
Okay.
It's just coming out of its pullback.
Let's take a look at that UK 100. UK, let's see where we at here. I need to go to, where did I put that? UK 100, here we go. Let's take a look at, again, what we're going to do with this. We're going to, now you went, I'll tell you what, Evo, since this is your ballywag, why don't you take over while I draw this out, okay?
Okay.
So I'm going to, you ready to share?
Yep.
Okay, I'm going to stop sharing. You got it.
Yeah, I got it. All right, guys, so this is what I've done. So what I'll do, my order is already placed, but I'm just going to pull my fib off just to show you what I've done. I use the indicators, the moving averages, 5, 13, 34, 62, and 200, which is the same as what Al uses. I draw my fib line from the cluster that closes, in this case, below the 34, the lowest point, to the cluster of candles that closes above the 34 to the highest point. That's how my fib lines go. And from there, I wait for a pullback. I consider it valid if it pulls back to 23 only. But in this case, it's even better. It's almost gone right back to the 50. And the further back that it pulls back, or the further down the fib line, I guess, or if you want to call it that, you can expect it to, once it starts going through the 0, where your fib line is, with a greater force than the 23. So I guess the rule of thumb kind of is that if it pulls back to the 23, you can expect it, once it starts to go, to hit the 23 on the other side of the 0. In this case, I've placed a buy, and I've placed my buy stop. It's a pending order, slightly above the 0 line. And for the UK 100, I usually give it just a $2 target, because I find it likes to turn around really quickly. Okay, there, that's better. I like it when it's a little bit above it, because I just want to make sure that it's not just tapping it. I want to make sure that it's committing to actually go past the 0. Now, it doesn't work out 100% of the time, but it does work out very often. So, sorry, I kind of rushed this, only because it's starting to get up there, and I wanted you guys to see what I have done. So the fact that I even looked at this in the first place is because all the indicators are in the order from smallest to largest in this case, which is indicating that it's going up. Even if it just goes up a little bit, that's fine. I'm trading on a 5-minute chart, and it's scalping. So it generally does go pretty quick. I do like to see something that moves a little quicker than what this is doing. This was good. If it would have gone up at that same angle, I'd be a lot happier. Sometimes it'll start to meander around, and then it just the momentum has died, and then I have to wait for another setup. But for me, this strategy is quite lucrative, and I end up being successful and take profit. I would have to say anywhere between 90 and 95% of the time, as long as I'm following my rules. But like this, now it's starting to kind of stall out, and that bothers me when it does that. But that's it. So I've got it set. I never put my stop on manually unless of course I'm leaving my computer for some reason and I'm already in the trade. I tend to pull them off if I have to leave, and then just go to something else. But I know where it is in my mind where I'm going to put my stop. And if it hits that, if it triggers my trade and turns around, starts coming down, then I will just get out of it. And generally, my risk is it's 1-to-1 or 2-to-1 as far as double the risk. So if this is at $2 move, then I will put my stop at a $4 move. It all depends on what the chart looks like. That's just a rule of thumb for me. But obviously, every chart and every setup is going to have its little nuances that you need to tweak as far as the stop loss goes. But I'm pretty hard and fast with my take profits for the UK 100 in particular. I always use a $2. For some of the other ones now, I've taken to measuring the candles to see what they seem to be moving like. And I generally will measure the smallest one and use that as my take profit. It's just a very conservative way to trade for me. And it gives me a higher probability that I'm going to get filled, and I'm going to take profit on it. So I'm more of the mindset that I take several smaller trades, and rather than one big one, because my nervous system cannot deal with it. If I have to sit here watching it go back and forth and draw down back and forth, it doesn't sit well with me. So I hope you guys all understood that. And if you have any questions, just let us know. So right now, we'll see. I mean, this helps me too. I use the RSI, and that's just something. It's an indicator that once I've already done all my analysis, I use that to see, what price may or may not potentially be doing. So I like to pop down to the 1 minute. I do set up everything on the 5, but I want to see on the 1 minute just exactly how things are progressing. And as you can see on the 1 minute, these are all still in the same order I want them to be, which is good, because as long as it stays like that on the 1 minute, then you know it's going to stay like that on the 5. So now I'm just kind of waiting, and it looks like it's wanting to pull back again. You see, and this is what I don't really like when it starts doing this. The markets this week have been a little bit bizarre, but yeah, I think it has a lot to do with, like what Al says, the last week of every month, it has the, what was it, the FOMC news comes out, and then the whole first week of the month also, I don't know why, but things just kind of don't move the same way. Not to say you can't find good trades, because you still can, but they just don't move the same way. So,
there was a question about the color coding for the EMAs. What's your color coding and the values?
okay, my green is my 5. I think for the most part, Al and I are quite similar with their colors as well, at least the some of them. But my green is my 5. My yellow is my 13. My aqua color here is my 34. My blue is my 62. And this last pink one, or fuchsia or whatever, is my 200. And I just have them like that on every one of my charts. And that way I know at a glance what they are. I just got used to them. I think they're similar to yours, Alan, that the green and the yellow are the same. So is the aqua. I think just these two might change. I think one of your time frames, your 62 is blue, and then you have different colors. But I just keep it the same, because I'm always using the 5 basically. Yep.
For all practical purposes, the blue I use is the 34 exponential moving average for all practical purposes.
Oh, okay. Okay.
Yeah.
So yeah, and then the 200 is always pink, and because I am mostly on this chart, so that's built right into my template. So then when I'm monitoring, I don't bother changing because I don't stay on the 1 minute for very long anyways. Al tends to use his different time frame charts differently than I do. So he likes to distinguish, which makes a whole lot of sense to me.
And
So
we just got the, I don't mean to interrupt you there, Eva, but we got the alert on our US Swiss. It did cross
okay,
the,
if you
I'm
want
not
to
sure if
share
this
it,
is, we don't have a 5 minute close yet. We still have to wait. Yeah, hang on just a second. We have about another minute to go before this candle closes. So
okay,
we just got the alert. So we have a little bit of time here still, but
okay.
it is looking to, uh, were you done with what you were doing there?
Well, I just wanted to have a quick look at the German while we were here, but if you want
Okay,
to,
why don't you do that? I'll let you know if this thing confirms to go short. I'll tell you just, so go ahead, just keep doing what you're doing.
okay, so this, I drew this earlier today, but now this is what I don't like, guys. You see this, how it's going sideways? I mean, you can still try to get into a trade, but I like it to move fast and quick. And when it's doing a lot of this, the picture tends to change. So I drew my fib, and now it's just it to me it's not good anymore because my MMAs have switched over on my 5 minute. So and that's what I do is I just go through my charts like this. Let me get rid of this guy too. And I just look like if they're lined up the way they need to be, and this one is not, then I keep going. This one is starting to, but again, this is the NASDAQ. And I don't really like to trade this before the market opens, or at least I don't want to be in a trade or anywhere near getting into a trade right before the market opens. It's only 8 o'clock Eastern here, so there's still an hour and a half. But I mean, this isn't moving any slower than the German and the UK 100 at this point in time, and their markets are open. But still, it's not completely lined up how I want it to be. I mean, I might look at this, but I just I don't know. For me to keep up my 95% win rate, I have to have it the way I want it to be. So um, you just need to kind of, and that's it. So you go through them, and I use the same strategy on cryptos as well. Like right now, Bitcoin's moving sideways too, so I can't really do a whole lot with that either. Uh, Ethereum, it again, they're all kind of moving sideways right now. So for me, that's not good. I like the really good, strong moves like this, for example. Like when it moves down quick, chances are it's going to move up quick. But they're all kind of just ranging right now. They're just basing, and when that happens, I don't like to get in the trade. I'd rather not trade, and I've done that before where I will not take a trade all day long because it's not fitting into where I want it to be. I'd rather not lose money rather than risk trying to get something that might be elusive simply because of the way the market's moving that day. You look at them, they're all ranging. They're all ranging.
Not to interrupt you there, Ava, but we do have to close and did a market order to go short on the
Okay.
US Swiss.
You want me
Yeah,
to
let
stop
me,
sharing?
yeah, I'll go ahead and stop sharing and I will take over here.
Okay.
And screen one, here we go. Okay, so right now I'm on my 5 minute chart. We got the 5 minute close below the red line. So now I can actually pull that right up there. And I'm looking to see, and it came back up, tagged the red line. Now, this was a strong, now if you look at this candle, this 5 minute candle, there's like no wick at all. And so the next order just came in, just tagged that. As soon as that candle closed with no wick, I just did a market order to go short. My target is right now. I mean, I would be okay even if it goes all the way back up here to where the 2 is at this point, but I'm in the trade. And if it comes up to where the 2 is up here, I may take another position if everything still looks good. But you can see that I had the spread. Right now we have a 4-0 spread, 4-point spread on the Swiss to the strength. And so right now we're in this trade or I'm in this trade. And so right now I'm in with the tag or the red line. The reason being is that I had a 5-minute candle with no wick at all, came back up. Now, then my target's going to be down here where the 3 is. Now, if it comes up, if this thing pulls back, I can take another position. I'm okay take another position here. But right now, my stop is going to be all the way up here. I've got 15 pip stop, which is all the way up here at this area. And I'll look at this little wick. I'll just move it just a little bit out of that harm's way there. That's just what I do. I don't expect I'm not going to probably let it go all the way out to my stop anyway. If it comes and starts closing above this where the 2 is, it comes back, I will probably be out of this trade if it has some momentum shift. But right now, everything's still looking good. And my target, this is my target here where the 3 is. You can move this over. So that would be my target. I'll get out of the trade. And if it pulls back, I can re-enter the trade up in here again. And so everything's looking good. The Swiss is still strong. And I can just pretty much stay on the 5-minute chart if I want to, or I can be looking at the 1 minute if I want to, watch how the overall price action is. But right now, we're good. As soon as it comes down here, I'm out of the trade. And actually, I'm going to move this line up to where my target is, and maybe even a little bit up above. We have a 1.5 point spread. So basically, it would have to come into the red line, tag it, and have to go another 1.5 pips below the line in order to be filled. So in other words, if this is at 91, 99, you have to go all the way down to 91, 97-ish. It would have to go, the price, the tip of this candle would have to go all the way down here to be able to fill me if I'm up here. So like I said, I'm usually looking, this is 7 pips. I'm okay taking anywhere between 5 and 7 pips on this trade. As soon as it tags it, I'm out of the trade, take my profit, wait for it to pull. If it pulls back, once it tags here, if it pulls back to this area again, I can take it again. Okay, so but I'm gonna move my target, keep my target just a little bit above this line, give it about, I'll give it about a pip. That way I have about just, all I need is about 1 pip before it comes. If it comes down, tags this, it should, if it has enough of a move down, it'll take me out of my trade. And so there we are. This is, so we're in this one right now. You see, when it tagged this line, this is where my fill was. And it's probably going to be a little bit about pip and a half, maybe. Yeah, there's my spread. So I came back, tagged the line. I did a market order, and this is where I got filled. My spread difference. So you said you're going to give up your spread getting in. You can give up the spread getting out. So. Keep an eye on your UK 100 trade there, Eva. Let me know if that starts to go. Right now we're in this trade, and I'm going to set a target for an alert on this area, so I'll know when to get out if it doesn't fill. And we're good to go.
Yeah, I'm watching it. It's it hasn't taken off yet. Usually it's pretty quick when it does go.
I do like we have a nice little spread here with the Swiss. The Swiss is still strong. And I have no reason to think anything otherwise that it will give me some chance of taking some profits on this. Any questions? Any other questions around?
There's a question in the Q&A.
What is British pound up to? Let's see. British pound is, it is up to a little bit of strength on the 30-minute, strength on the 15, strength on the 5. We could maybe start looking at the British USD for a possibility. We have strong strength. So let's take a look at that while we're waiting for our alert to hit. British USD. Let's see, we're in this one here. This over here, so I don't forget where I'm at. New Zealand Swiss, I really didn't see much on that one, so I'm just going to kind of pass on it. Let me duplicate this and find the British USD. Let's take a look at that one. And we're looking at the British is the first currency of the pair. We did get a 15-minute close above. This looks like this could be a possibility of a trade here. See, we got the 5-minute close above, had a pullback. Here's our 5-minute fib line. Let me see where my 2-minute lines are. Minute green, 2-minute red. All right, and we have the right now we're between the this is a 5-minute red right here. Okay, so with the British pound, what I'm looking at, we did get the close above on the 5-minute. We did get the pullback. Right now, I can't take this trade. Right now, if this tags the green line, which it looks like it will, then I can take this and I can pull it back. We have confirmation that's going up. We have confirmation to get in where we could have gotten in when it hit the red line. It still stayed below this other 7-pip line. If it comes up here and tags, then we have to wait for it to come back. And if it comes back in again, it gives us another opportunity. So here's what we're looking at with this one. So we had the close above. We had the pullback. We're able to get into the trade anywhere between the red line and or when it came back up through. So we got in here. Now we're waiting for it to tag the green line. Once it tags it, it does not tag it yet. Once it tags it, then I can come back and I can enter there and do for another target. So this would be my next. If you're not in it already, I've got to wait till it gets back here to where the 4 is. This would be my entry target. I said I really want to see it tag that first. And theoretically, if it tags it, you'd be out of you got in down here, you'd be out. This would be your first position getting out. This will actually give you another chance to get back in again. Or if you're still in this trade, then you wouldn't have gotten your target yet. And we're looking at the British pound now I want to look at the 5-minute chart and see where my spread is. Now my spread's real good here. My British pound I got 6 spread here. On the 5 period, I got 6 spread here. So on this pullback, there we just got the tag of the green line. So now I'm able to, if you were in this trade, you could take your profit right here, or you could let it run if you wanted to. But I expect it may come back and retest this area right here first. So right now I can place a buy order, a pending order to buy. They're at the 138.20. Buy limit at 138.20. I'll make it 22 because of the spread. 22. Take profit 7 pips. Stop loss 15 pips. And I'm going to risk 2% of my account. And that allows me with a basically a 0.44 lot size. If you're, and that'd be a buy limit, trade set. Back this off just a little bit more, modify it, and we're going to set an alert. Now we wait, and let's take a look and see how our U.S. Swiss trade's doing. If it starts to go and starts breaking these pivots right here, and if it hits this green line before I hit my target, I'm going to be reconsidering the fact that this thing may be starting to reverse a little bit. But I'm still willing to give it that 7 pips. And we put an alert on here. If it gets up there, we'll reassess. Right now, I'm in this trade short, and I'm just waiting for it to come down and hit my target. We still have the strength to the Swiss, so everything's still looking good on that. Any questions?
Doesn't seem to be any.
Oh, good.
And so let's see, I guess we can go hunting for another one, see if there's anything else to be looking at. Go to our Hercules. We did the British US. I don't like the British yen, not particularly. The yen is, I like doing the top 2 against the bottom 2. I like staying out of the ones that are in the middle. We could do let's take a look at the British CAD. Take a look at that one. British US, we're still waiting to buy on that one.
Patrick says, how about Kiwi CAD?
Kiwi CAD, let's see what Kiwi CAD is. Kiwi, I don't like the fact that the CAD is in the Kiwi is, I don't see a big spread here. I mean, we can take a look at that, but let's take a look at Kiwi CAD. There was a trade earlier with the Kiwi. Let's see if I can find it. Where right about here? I might have to put another launch on here. Let's take a look. Kiwi CAD. Ooh, that's making some headway there, isn't it? Close that up. Put my put these on. Got my 15-minute chart. Give myself some room so I can see what I'm doing. And put the fibs on. Nice spread here on the 15-minute. 5 and a 1. Here's our red line. Here's our blue line. Coming up on a 15-minute blue. There's a 15-minute red down there. Not really too concerned about that right at the moment. I'm more concerned right now, it's the fact it's coming up on the blue line. I'm more concerned about the 5 and the 2-minute lines. So here's our 5-minute, let's see, here's our 5-minute red right there. Remember the blue line, a 15-minute, any 15-minute line is going to be blue on the 5. There's a 5-minute red. Five-minute red right down there. And then we have, so right now we're looking at Here's our two. So basically right now we did have a close above. We do have strength to the Kiwi. The Kiwi is the first currency of the pair. We did get the close above on the 5 minute. It did retest the line. And now we're looking at it to come one up. And here's the first green line, red line. Let's see where we're at here. These are our 2 minute lines right there. This is a 2 minute. And this is a 2 minute red. Propagate that over to the 5 minute chart. And we can just look at our 5 minute right now. So we had the strength of the Kiwi at the close of the 5 minute close above, which was actually right. It actually barely closed above there. I like this one a little bit better. And if you look, if I draw a vertical line on this close right here, the CAD was stronger. I can't take the trade. Move it over one. Here, the CAD is still stronger. Can't take the trade. Here, now the Kiwi got stronger. Kiwi is the first currency. Now we can take it long. So here is the first, at the close of this candle, I was able to take it long. I was able to get in here. Here's target 1, target 2, and target 3. If you were to do that. So if you got in down here, you got your first target already, right, on this candle. Once it breaks that, you can retake the trade once it comes back down in this area, if you choose to. Or you could still be in the trade. This is a nice little rally, a little bit of a basing. And this could be the next target. Or you can enter down here. You would take profit up here, or you can stay with the trade. If you look at your moving averages, we'll see what the moving averages are doing here. You can see our moving averages are all green over the yellow, over the, this is our 62, this is our 13, this is our 5, the green, yellow, and the purple. So it's still in an uptrend. Now we have that thing is we have a little wick here. We have, if you look at this three candle formation, this is telling me that it may start wanting to retrace a little bit back to the origin of this move. Here's a little wick, and you have 2 lower lows on either side, 2 lower highs on either side of it. But if it pulls back down, and we still have the strength on the 5 minute chart of a 3-point spread, we can take the trade again. Although we didn't take it because we missed it. But that's a viable trade there. Let's see how our Swiss trade's doing. Still hanging in there. And British US, what do we do with that one? This one is still waiting for it to come back down. And if you miss them, you miss them. Don't chase the trade. Make sure have the trade come to you. Any questions?
None here.
Patrick said, love that. It's not a question, but it's a commentary, which is good. Don't chase the trade. Let the trade come to you. Mm-hmm. Exactly.
And most of the time when you end up chasing a trade, you usually end up getting bad fills and low profit margins. So even if you're profitable, oftentimes you're lucky just being able to do that.
Yeah.
Now, once this thing, if this thing's trending up, if it comes up and hits the red line, then you're able to take it here at the green line, but you got to wait for it to pull back. Right now, you can't really do much. Now, this is a nice little rally, little basing, and probably a good chance it's going to rally some more. But again, I'm not going to chase. I want to see it pull back. Oh, let's see, US Swiss, what's it doing? It's still hanging in there. We did get the confirmation. We did take it short. We still have lots of room. It's still not really doing a whole lot. I mean, it's still respecting this little area. And actually, this would be like a little Sherlock zone right in here. Oh, come on. And I would expect this to be somewhat, we call it Sherlock. It could also be like the same thing as a retest area. Now, if it came up and retest this area right here, you can take that short there. It's still well within our 7-pip range. In fact, it's probably about 3 pips. This area is probably right about in the middle of this zone and this zone. That'd be about 3 pips. It's 92.10 to 92.07. So again, that's only a 3-pip pullback. 3 pips is, when you're only going for 7 pips, 3 pips is half the move. But again, we're looking at large position sizes and short profits. That way you're not in the trade very long, and you can get you have very tight stops, tight targets. And if we look at the moving averages on this, you can see it's trending on down. The price is staying above the yellow line. We had a nice little pullback. The green never did cross over the yellow. It's still saying this thing's going to go short.
Excuse me, Al.
Yes.
Patrick has a question.
Oh, okay. Never heard of Sherlock. What is it? Sherlock is basically, yeah. What is Sherlock? Sherlock is a indicator that we've had. Brian and I have been using this probably for about 5 or 7 years. We had one of our traders programmed it for us. And basically what it does, it finds key places where the price is liable to change. And let me see if I can find a chart here that will maybe help to describe that. Give me a second here, see if I can find. I do have it on a version of it. I have it on the MT4 platform. See if I can find it. I can pull my chart up. There it is. This is what it looks like. This is basically what Sherlock looks like.
Nope. You're not sharing.
Oh, I'm not sharing?
Oh, there you go. Okay.
Yeah. This is basically what Sherlock is. So if we were on, let's see, what pair were we on here? We were on the US Swiss. US Swiss. Let me find that here. And we're on a 15-minute chart, 5-minute chart. And you can see that this little zone right up here is basically, I just eyeballed mine. Let me see. This little red zone here is at 92.11, I believe. Yeah, 92.11 to 92. It's only a 2-pip zone. 92.11 to 92.13. Let's see how close I was here. I've got 92.09 to 92.11. So basically it drew it right about like that. So it was basically looking at this little wick this little area right in here. But anyway, the algorithm, the indicator, basically what it does, it looks at the price action, It sees where the strong move down is, comes back in, takes a look and sees where the pullback was, and then it draws a zone. And so right now it's showing that there's a green zone right here. It's still saying this is a lot of buyers coming, this buy zone. But once you break through that, I mean, if we're going to be looking, once it breaks through this top green zone, we're looking at 91, 97 would be the next zone down below, which is 97 to 91. And I think you're going to find out that there's something going to be right there on ours. And that's the demand zone. And this is one of the tools that we're trying to make available. We have with these tools right now, we have to get them reprogrammed. We had to find a programmer that can transfer the data and the script of the program from MT4 to TradingView, which is not an easy task. Let's see. And that's what we're working on that. We have some programmers working on it, but it's just taken time to get it to happen. 97 to 91. So 97. Yep. Yep. Don't want to do that. Point 91, 90, point 91, 97. Oh, come on. Point 91, 97. Why is it not picking up my, oh, and there's 0 there. 0 point. There we go, to 90. That's our zone right there. And that, you can see that zone is right below where our target is. That's our Sherlock. That's our green Sherlock. And so that's basically, and basically, for the most part, I can pretty much just draw them because I can see it, but this is a nice little tool that shows you where these little zones are. And you can see it right now, it's got more zones above. And we do have this green area right here. That's one reason why it's taken so long to get through that. But you can see it's working very nicely here, coming right into our target zone.
Al, can you just tell them what the other colors are?
What other colors? Oh, of the Sherlock?
Yeah, like you had the orange,
Yeah,
and then you had
the
the
orange
red.
basically means that if it's red, that means that the price hasn't been up into that zone yet. Here, this was red until this candle came back up. Once it came back up, it retested this zone, and then it made it change it to orange because it was a retest area. So these have basically been tested. These two are fresh. There we go. That's a nice little. So right now, the price hasn't been back up to either one of these red lines. And if it's, let's see if we can see down below. If it's real dark green, that means this one's fresh. This is not fresh. It means the price way back over here, it left it, made it dark green, came back, retested it, and that made it change color. So basically all it just means is that the price was at that area once before, way over here to the left, and now it's just coming back to retest it again. And how are we doing with our trade here? We're still profitable. And we're still looking for it to come back down and hit this 91, 99 area. That's our fib line. And if we get a close below here, now this is also forming a little trend line. If you can see this, let me see. We have a high, lower high, lower high. We actually have a trend line developing here onto this. This is a nice little move, actually. This is one you may want to consider maybe staying in a little bit longer, but I don't generally do that because I like taking my profits and moving on. But here's a nice little trend line coming down. We have a nice little channel. Strong move down, pull back, strong move down, pull back, strong move down. Usually about the third time. That's usually about all you're going to get before you get a major pullback. I can usually do it up to 3 times, and then after that, I'm out of the trade. You see this thing only came up to here. So we started up. Let's see, where did I put my red line? Yeah, here's where I started. This is drop, low base, dropped, came back, retested it, dropped some more, And right now it's coming right into that next drop area. It's still showing strength. We're still on the 5-minute chart. We're still showing a 6-point spread on the Swiss. Any pullbacks, as long as they can stay with a nice little spread here on the pullbacks, that would be just another entry. But like I said, we're still waiting for this thing to come down and hit this green target. For this red line here, where our target is. Here's a nice strong move down, little basing. I like this move. Coming into our target. Now, I say if it tags this red line and starts to bounce, I'm going to be out of this trade. Now we still need to get the spread. Right now we have a 1.3 spread. Now, when you start getting close to these target areas, take a look, watch your spreads, and you'll see sometimes they're going to start spreading out a little bit. Right now we have a 1.3. If it gets down here, you may see this thing pop up to maybe 2 or 2.5. If it does, that means that the market makers are playing with you. But right now, that tagged it. That's close enough for me. I'm out of this trade. There's my alert, and we're done. And that's how it's done. That's our US trade. Now basically, now that I took my profit, now if it pulls back to the line here, I can re-enter again at the 4. Or if you're still in the trade, you can just keep on riding it down. As long as it stays, as long as you keep seeing this staying below these moving averages or below the trend line, you can just keep on riding this thing down if you choose to do so. That's your choice. That's something you have to put in your trade plan, is how much of a run you want to go for. Keep in mind, let me pull up my, where is it here? I need to find my calculator. And some of the new people probably are not aware of this factor here. Let me get my calculator up here. And we're going to show, let's see. Yeah, we'll just use this one here. Here's our pip calculator that we have. And this is also going to be made available to you. Now, if we're looking at the US Swiss, what we do is have a little drop down and say what the US Swiss is. And what it says is, if you come over here and look at the US Swiss, you'll see that it's $11.25 per pip value. Now, if you look at the Euro New Zealand, this is one reason I'm a little bit leery about. I don't like doing the New Zealand pairs. Aussie New Zealand, $7.17 is the standard lot size for a pip. British New Zealand, $7.17. If you're on like a Euro US, most of your US pairs are going to be $10 a pip. But anyway, with the US Swiss, it's $11. So if I have, let's just say, for example, you have a $1,000 account. We'll make easy math here. And you want to risk 2% of your account. That means you're going to be, if you have a $1,000 account, you want to risk 2%, and you want to use a 15 pip stop. That says in order to risk 2%, if you get stopped out, you're going to risk $20, but you can take a lot size of a 1.2 lot size. Now, if you were to make this a 40 pip stop, now take a look, when I change this, take a look at this lot size. If let's say I want to do 4 times the lot size, your stop size. So say you made this a 60 pip stop as opposed to 15. You're going to find out this is going to be 1/4 of what, rather than taking a 0.12, you can only take a 0.03, which means now it's got to go 60 pips in order to make 20%, $20. With a 15 pip stop, I can take a much larger lot size, and I'm only risking the same amount, but I've got a tighter stop, and I can take 4 times the lot size. So that's why we say that we have a very tight stop. We can take a larger lot size. And so basically with this, if I can take this trade 4 times, one time in the time it's going to take you, I can do the same trade 4 times with this. If this thing comes back, I took it once with a 1.2, comes back, I get in with another 1.2, take it another 1.2. So right there, I made 2.4. I had 7 pip profit on 2.4. That'd be that's up by 2% for the day. 2% for the day, you do that 5 times a week, you've got 10% on your account in the week. And that's why I do the scalping, because I just go for the 7 pips, come back in, maybe take it again. If I can do that twice in one day or 2 different pairs, I'm done for the day. And I can go and do something else. And I'm only in the trade, roughly on the average, I'm probably in the trade maybe 30 minutes on the average. Is the currency strength meter as good as the Hercules? Our currency strength meter is our Hercules. It's the relative currency strength. It tells us, basically, it tells us how strong the Swiss is against the US dollar. If I pulled up the whole chart, it shows me these are the 8 major currency pairs from 0 to 7. That's 8 different pairs. And shows me how strong the 8 different pairs are against each other on different time frames. That is what our Hercules is. And what's nice about the Hercules is that we can overlay that onto our trading view chart so that I can see with just the symbols that I have. I can go with just symbols, or I can go with automatic, where it actually pulls up all of them at the bottom of the chart. It takes a little while for it to propagate. There it goes. So I'm looking at the same thing here on a 5-minute chart as I am here on my 5-minute chart. What's nice about it is I've got it right on the chart itself. And like I said, once I'm in the trade, all I really care about is what the 2 pairs are, so I can just separate, so I don't have to look at all of them. I can just look and see just the symbols. That's one reason why I like TradingView, because we have these tools that can overlay right on top of the TradingView chart. Any other questions? Is currency strength meter as good as the Hercules? I'm not sure what. I'd have to look and see what that is. I'll take a look at that and just see. I don't know anything about that one. I'll check it out when I get a chance. Any other questions? How's our time doing here?
We've got 15 minutes.
15 minutes, okay. So right now with this US Swiss, we got our target, coming back, waiting for another entry up here at the 4 on a pullback. You'll see a lot of times these things move in 7 or 15 pip ranges. Right now it's going from, if I see where this thing broke up here, there is, that's 14 pips right there. This would be 21 pips. Actually, that's 27 pips right to that one. So if I go from this area to these, our markers, There's our 21 pips. And I'm just trying to take a third of that. I try and take that third as it goes down 7, pulls back, get my 7 pips, goes down, get 7, maybe get 14, maybe get 10, pulls back, and just keep on zigzagging it on down until it gives you the reversal. But right now we have this little zone right here. It's got to get through that little zone, which is right here at the 91 area-ish. 91, 90. Let's see, over here on this chart is showing 91.97 to 91.91. This is a pretty decent green line. It's been hit before, and it bounced off of that area before. So let me mark this out here. So this would be 91 to 97. That area right in there. That's where the and if I come over here to the left, oops. Let's go to the 5-minute chart. And if you look over here to the left, I'll bet you're going to see that there's going to be an area. Let's get a higher time frame here. If I drag this thing over, you'll see that this is an area that's been tested before. Strong move up, came back down, this little wick over here. I'm on a 15-minute chart, but all the way back here on August 9th, we had a strong move up, came back, tested it, came back up, came back, tested it, and then it took off. So this is the area, this is the area why this thing is a brighter green, because it's been tested before. It's been tested right around this, off of this candle. That's how deep it's gone into this zone. And that is right here. And we'll see how it goes. Come back here to our 5-minute chart. And I'll bet there's going to be some marker here on the 1 minute. And here's our green 2-minute line. And I would expect it to go deeper into this one. You see right here's the red, here's our green, here's our red, and then back up to our 5-minute. And so target 2 would actually be, we could make another, this would be the next target down here. So it pulls back. See if we can get us in here. Now, again, now look at the US dollar now on this, that's on the 1 minute. Let me get on the 5-minute here. Right now, the Swiss is still strong, but now as this thing pulls back, when it gets up to here, check out and see what Hercules is telling us. So in other words, like we're looking for, and so right now Hercules is saying it's a 6 and 3, so it's still good. So if it comes up and tags that with a 6 and 3, we're still good to take it short. Remember, we still have our little, and it could come up to, could retest our Sherlock, and may even come up and retest our 2-minute zone. This is 5-minute, actually it's 5-minute zone up here. Make sure you know which chart you're on. 5-minute green, green, red, and then the blue is going to be up here. Everything else is in between. So now I can basically take it from this. So we had, here's our high, here's our confirmation. We were able to take it, hit our red line, can come back up. You can enter it right when it comes up in tags in here. We can enter it, or we can go all the way up into this one, into this zone, or you can take it when it comes back through with a sell stop, and again you're still looking at your target.
Patrick, in answer to your question about the evening session, that's Monday nights with Brian. That's a swing session. What do you know what time that starts, Al?
I believe it's 8 o'clock
8 Eastern.
8 Eastern.
8 Eastern on Monday nights. That's with Brian.
Yeah. He may not be able to do it this Monday because he's got parent-teacher stuff going on Monday. I think he told me yesterday he may not be able to do it Monday, but you keep an eye. He'll probably put an announcement in. And speaking of that, I'm going to be on vacation next week. I do plan on coming into the room, but there may be some days that I may not. And Eva and Christine will be taking over for me if for some reason I can't. But just so you know that I will probably be leaving pretty much right after 9 o'clock, just so I can do what people do on vacations, I guess.
Like
And what is that, Al?
I don't know. I wish I knew for sure. But we're going to be doing our family vacation, and we'll be. I plan on being around, but if for some reason I have internet problems or computer problems or whatever, then Christine and Eva will be here.
Yeah, better bone up on my currency trading.
There you go. Well, at least, just focus on the indexes for that week, for the week.
Yeah. I mean, that's my forte.
I mean, a lot of people like the indexes anyway, so nothing wrong with that.
No, nothing wrong with that.
Al, you have a question.
Oh, let's see.
It's in the chat.
Okay, it's a paper trade. Trading option, yours use, let's see, is paper trading option on TV just simulated trades in order to teach the process? Basically, I'm on the, here's a problem with TradingView. Unless you have a broker, there's only certain brokers that you can actually take trades on TradingView. So in order to eliminate that, what I do is I just do a paper trade on TradingView. So I can actually show you where the trades are. I'm keeping tabs on I have another platform that I use, and I take the trades on another platform for myself. But the trades I'm showing here is pretty much for demonstration purposes because I don't have my account set up. The account that I use is not available yet on TradingView. We're all hoping to see if we can get NV set up with the TradingView, but again, that's a work in progress. But TradingView doesn't allow, I mean, Awanda, you can use Awanda. The problem with Awanda is it's a US broker, and if you're in the US, you can't do opposite trades, you can't hedge, you can't do a lot of things with any US broker when it comes to the Forex. Plus, it also doesn't give me the indices and the some of the other items that we like to trade. Yeah. So with a paper trade, I can display it all on the TradingView, and that's why I use the paper trade. But I am taking the trades off to the side. Sometimes I don't get in quite so timely because I'm too busy illustrating what we're doing. Hopefully that answers your question.
Yeah, and then sometimes it's hard too if you're using a live account. You can't keep jumping from one to the other. You kind of have to keep your eye on it. And when you're teaching a class, it's a little bit tougher to do that. and it could go horribly wrong for you if you're not paying attention.
But I am taking trades on another account, which I will use for validation, verification purposes of what we're doing. And I do take some trades outside these sessions throughout the day on occasions. But I'm usually done trading by 11:30 East Coast time. I'm generally done with my trades for the day. Some days if it's a crummy weather day, I may sit here longer. If it's a really nice day, I'll be out of here by 9 or 9:30 and start living my life. So we never did get this thing. Now it did come back and test the trend line. Now it came within this thing. If you look at this, it came within probably 2 pips of our. That's the top right there. It came within the spreads where there's 1.3 spread. It came within 1.7 of the target. It did come up to our trend line. Anything above this was, I mean, there again, this is subjective. If you want to take this or not, I would not fault anybody for taking this trade in this area. Came up, tested the trend line, came up, tested this, did not get above it. If you were to wanting to be aggressive and take that trade, that'd be perfectly fine. And you'd be looking at, I would actually probably be looking more at perhaps this area down here now for the next move down. Here's my trend line. Here's my ultimate target. This would be the projection. I did not take this because one, I was too busy talking for one, and secondly, it's Friday and I don't need to be doing it today. But right now, if you got in, you'd be right back to where it bounced off again. If we get the close below here, especially if we get a 5-minute close below this red line, you can probably do the same thing all over again. But you can see we did not get a 5-minute close below the red line, which gives me somewhat pause about whether or not this thing's going to keep on going. Generally, though, it goes from, you'll get a 21 pip range from here's your first 7 pip, base, drop, second 7 pips, base, drop. But again, it's got to get through this little Sherlock area here. And we're right here at a 2-minute line, right here at where the bottom of this pivot is. I would probably not push it more than down here. If it comes back into this area, remember there was a bounce way back here on the left-hand side where this yellow line is. That's how deep it penetrated into this green zone. I would not be surprised to see it come back and retest that again, maybe go a little bit deeper. And that's why I say this is a good target area right in this area.
And in answer to your question, as soon as Auvoria Prime has all the new platforms set up, that's when the indicators will be ready. And as of yet, we have no idea when that's going to be. We're thinking it may be by the end of this month, but we don't know for sure. So just be patient, guys. When we know, you will know.
Yeah. We're as anxious to have the new, it's not a Zoom room, it's more of a Twix type channeling system where they're going to have channels and we'll be able to run. And one of the things we're going to try and do is, even though we're scheduled here from like 7:30 to 9 o'clock, we'll probably be keeping ourselves active, even though we'll be on the schedule from 7:30 to 9. But just because this says we're going to be stopping at 9 doesn't mean we're going to be stopping at 9. We won't have to. And right now we have to stop because other people are coming into the Zoom room for their sessions. But once we get to this new system, I won't be limited to having to be out by a certain time because of the someone behind me. We'll have our own channel. We'll have our own room that you can come on in anytime you want to see what we're doing. So if I'm taking trades at 2 o'clock in the afternoon, I'll probably have my charts up and I may not be doing a lot of talking. I may just be sitting here trading. You can sit there and follow what I'm doing.
I would also like you to have a quick look at the pound US before we finish for the day to see if the limit order is still valid.
Okay, pound US. That's a good question. Let's see here. Where are we at? Haven't had any alerts. Pound US. Well, we never did get filled. It's just kind of, so right now it's made it hit there. So right now it hit the red zone, came back, hit the green zone. If I hit the green zone, the pound is right now, that's a 5 and a, let's see, this would have been a, looks like a 5 and 1. This would have been a valid on the pullback. If you could have, yeah, you could have taken this on a pullback into that area. I said when we got the 5 minute, we didn't get the 5 minute close, which is actually kind of good because just bounce and tag that. You still had the strength on the pullback. And so then this pullback would have allowed you to take it long here. And we still have the strength. Now, if it comes, so basically what's going to happen now, if you got in here, you could have taken it here. You could be getting out here. So this could have been an entry. And you can also see we also have a trend line developing. Well, we have our trend line. Let me just take this off here real quick. We have a trend line coming in. Once it starts trending, if it follows a trend line, I'm usually okay taking the trades as long as it's, so here's the anchor, here's the hit, here's the hit. That would have been a valid hit. You could have taken it. You still have the strength down below. You could have taken that on the pullback. Once it gets up here, we would be looking at a, so now you'd be looking at something like this. Here's the anchor. Came up, hit the red line, came back, retested. And with that, we could probably almost look at this being a target up here. Now, once you get up to this area, you're at a 15-minute blue line. I would not expect it to go up here without a stronger pullback. I would not get in right now. I would not chase it. You only have 7 pips from where the 3 is to where the red line is. You probably, that's a 34 to, yeah, you got 7 pips. If it comes up here again and comes back and tests the trend line, I would not be surprised if it hits the trend line and comes back and tests this green line right down here. I'd be careful with this area right in here, from here to, I'd be careful of this area right in here. And this would probably be a Sherlock zone. Let me see, this is pound US. Let me take a look and see here real quick. Pound US, looks like we have a zone, 5-minute chart, 38.24 to 38.20. 38.20 would be right about there, right about to the red line, and 38.24 right about there. So that's this little area right in here. But if Hercules is saying we have the spread on this pullback, I'd be okay taking it, maybe go for another 7 pips. You're getting up into the overbought area up in here. If you're looking at your upper 25% that we often talk about, here's your blue line, a 15-minute line. The 15-minute, the 25% zone is going to incorporate from the 15-minute blue line, encompassing 2 of the 2-minute lines. And this would be your zone right here. This is your upper 25%. And remember, we say we don't take it long in this area until it breaks through and then comes back and retests. Then once it breaks through and gives us a 5-minute close above this blue line, then this area would then turn green. I'd make that a green line then. And now you have a area where you can go long, because now this would be the bottom of the upper curve. And there you're going from blue, 3 zones, green, red, and then back up to blue again. Okay. How are we doing our time?
We've gone over a little bit, but
Okay.
before we go, can I just show
Sure.
what's going on with this UK 100 just to make a final illustration?
Okay. Yep. You have it. You got it, Eva.
Okay, thank you. All right, guys, you see, I was saying how it goes sideways, and I don't really like to even set a pending trade. Look at what it's doing. This has been sitting here now for quite a while. These are all 5-minute candles, and you can see how many have closed. So this would be a reason why, and these now have gone into what I like to call the pretzel formation. There's no rhyme or reason to what they're going to do and when they're going to do it, because it's basically coiling up, deciding what it's going to do. So this is when I would just simply get rid of my trade and just wait until the UK 100 straightens itself out, if it even does so today. So just keep that in mind. Just because you set something up, it's not a hard, fast rule that you have to follow through with it. Keep an eye on it and keep yourselves green that way. And that's it. I just wanted to show that just so that they could see what happened to the trade.
Okay. Hang on just 1 second here. I got making a template here.
Okay, so you can share again now.
Okay. Yeah. Let me just save this real quick here. There you go. Okay. And with that, I think basically we're done for the day, done for the weekend. So we are going to sign off. And again, thank you everybody for coming in. We appreciate having every one of you. Thank you for your questions. And above all, be safe and stay green. We'll see you on Monday.
Yeah, see you guys on Monday. Have a fabulous weekend. We'll see you next week.
Hi, see you Monday. God bless. Enjoy.